Okay, let's get started. Good morning and welcome to today's Tuesday Market Outlook webinar. My name is Prakash Vijayanath. I'm a senior analyst here at Options Play. And today I'm going to be talking you through my thoughts and analysis on the current market. So before we get started, just a quick disclaimer. The types of securities, forms, and research tools used in this video are for demonstration purposes only and should not be considered a recommendation by Options Play or a solicitation or an offer to buy or sell any securities. This video is not intended to be used for individual tax, legal, or investment planning advice. So our agenda for today, we'll be starting off with the major equity indices, highlighting some key levels. We are seeing some pretty annoying price action here for the S&P 500, very neutral, very choppy, so quite difficult trading conditions over the last few weeks. So we will be highlighting some key levels and see potentially where price could move to if we get a breakout or breakdown. From there, we'll be moving on to fixed income and commodities. We'll also take a look at the sector rotational model, highlighting which sectors are outperforming and underperforming the overall markets. We'll take a look at some subsectors of interest that I have for you today, mostly a continuation from what we looked at last week. And we'll end today's webinar with some bullish and bearish market observations. And due to price action being so choppy and so neutral, I haven't really had any new ideas for this week. I think it's best to kind of sit in your hands and wait. Instead, what we'll be doing is taking a look at the previous ideas and seeing how they have been performing. So taking a look here at the S&P 500 using the SPY ETF. Now, price has been stuck below 420. This isn't news. I mean, we've had this choppy price action now for the last month or so. And it doesn't really look like there's any huge fundamental events that could act as catalysts for either the upside or the downside. Now, with the one exception being the debt ceiling. Now, that has been a big headline lately. Obviously, investors are concerned about that debt ceiling, whether the US would actually default on its debt. That'll have global repercussions if it does, due to the amount of countries and other central banks that have US long-term debt. So I do not believe that the US will actually let that happen. I do think there will be a solution sooner rather than later. June is the deadline for this. And that will naturally act as good news for equity markets. That being said, there's a lot of uncertainty in markets, and markets do not like uncertainty. That is why we are seeing the very neutral price action. Usually during times of uncertainty, we tend to see bearish price action. We tend to see prices decline, and we actually haven't quite seen that as of late. It's been quite neutral. Yes, choppy, but neutral nonetheless. And that bodes quite well for equities, in my opinion, because it indicates that even though we're not really seeing, even though we don't really have a clear picture of the macro view, especially with regards to the debt ceiling, prices are still staying neutral. And that also tells me that we should be getting a breakout rather than a breakdown. That is where my bias is leaning towards, a breakout soon. Because if you take a look, price is forming a higher low on the daily time frame. Oh, sorry about that. A higher low on the daily time frame. 405 was acting as a minor area of support initially, but we are now seeing 410 act as a support level as well, especially over the last few days. You can see there's been multiple intraday bounces from that 410 level. So this does indicate that we should potentially see this breakout above 420 sooner rather than later. But again, very much dependent on the macro view, especially with regards to the debt ceiling. Now, in terms of potential breakout levels and upside resistance zones, we have 430 as a minor level to be looking at. So it isn't that much higher than 420, but it was a reversal point in the past. So that could act as a minor resistance level should we see a breakout. Also, it has acted as support in the past as well. So it is a bit of a key level to be looking out for. If we get a breakout above 430 in the coming weeks, from there, you have the area between 450 and 460. So plenty of upside above 430. But above 420, 430 is right there as an additional resistance level to keep an eye on. Moving on to the NASDAQ 100, looking at the QQQ ETF. So overall price action, very strong and quite bullish, especially when you compare it to the S&P 500. Now, Again, I'm going to repeat what I said over the last few weeks. The reason that the NASDAQ 100 is outperforming the S&P is due to the fact that, one, the NASDAQ 100 is comprised mostly of growth stocks and technology stocks that are performing quite well, especially given that markets are now pricing in the Fed to start cutting interest rates this year. So that is going to be a long-term tailwind for the NASDAQ 100. And that is why we are seeing, that's part of the reason why we are seeing that outperformance relative to the S&P 500. However, the NASDAQ 100 also has no exposure to the large financial institutions that were negatively impacted during the banking turmoil. The S&P 500 does have significant exposure to them, which is why we are also seeing that contribute to the outperformance here for the NASDAQ 100. So overall, continuation high for the NASDAQ 100, breaking above a minor resistance level just below 325. And price action is looking quite bullish, momentum looking good, price forming higher lows. And in terms of the next key areas to be looking out for, it's actually at 330. 330, potentially a minor zone of resistance, previous swing level, like we saw, similar to what we saw with the S&P 500. So price isn't too far from that. But if we get a breakout above that, you're looking all the way between 350 as another minor level, or even 370. Those would be the two key areas that I'll be looking at. So plenty of upside as well for the NASDAQ 100. Momentum has been improving this year and turned positive earlier this year. So overall, the NASDAQ 100 actually has a much more positive outlook relative to the S&P 500. Taking a look at small caps. So small caps has been underperforming the NASDAQ 100. And, when it comes to small caps performance, we had a very good start to the year. We had this very strong rally, price actually breaking above 188, which is a 38.2 fib level. So a very significant level for breakout. And then we saw what was looking like a natural pullback before another move higher. Instead, the banking turmoil kicked in, and we saw a huge decline, breaking back below the 38.2 fib and all the way down to the 50% fib level at 170. However, price has very much respected that 170 level, and it is acting as support. Even on days where equities have moved lower, the small caps or IWM has not broken below 170 or has not closed below 170. So it does indicate that 170 is a very strong support zone. However, if you take a look at the price action from above 170 over the last few weeks, it hasn't been that good. Momentum still very much negative, and price is just unable to find the momentum to have a good strong breakout back to 188. Instead, it's still running into resistance at 180 a few weeks ago, and now even at 176, another minor resistance zone that IWM is struggling to break out of. So small caps definitely underperforming large cap names. However, the fact that it is still above 170 means that the risk to reward still favors the upside. It's just there's a lack of momentum, so it's not really the index that you want to be focused on currently. All right, moving on to TLT, which is the Treasury Bond ETF. So TLT has been underperforming as of late. We've highlighted the 108 key level as a major area of resistance, and during the year it provided some very nice bearish opportunities, right? I've said this on multiple market outlooks. We had major support at around the 100 level, and also more minor support at around 104, 103. This area here where price currently is trading at. But if we take a look at the price action over the last few weeks, there hasn't been enough momentum to even reach 108. Instead, price is overall trending lower despite the choppy price action, momentum turning negative, and price again looking like it could break below that 103 level, which would open the door for a revisit back down to 100. So bonds definitely still under some pressure, unable to even rally to 108, and momentum turning negative does not really produce a positive outlook here for TLT. It does look quite bearish. Price is struggling to bounce from each time it touches that 103, 104 support level. It is struggling to bounce higher from that area. So moving on to the US dollar, and the dollar index has actually found some momentum, especially towards the end of last week. You can see two big bullish candles there to close the week off. And so far this week has been a bit of a pullback, but still a limited pullback. Doesn't really look like a reversal. Looking at the weekly time frame, we do see a major support between 102 and 100. This is a major support level. In this case, it's actually 101. That's the support area here that price has been respecting. We are seeing a capitulation. It took a while for the dollar to find some momentum, but we are now seeing momentum improve quite drastically as well. So there is definitely rotation back into the dollar, and it does look like there could be a continuation higher for the dollar, potentially towards, well, 105.50 is a major level to be looking at. However, the other key areas that we could be looking at is at 103.50 as well. That would be a minor key area to be looking at for the dollar index. Right, taking a look at gold. So gold moves inversely to the dollar in the short term, especially. It's also a safe haven asset. And gold had a very strong run in the from November, really. It rallied all the way to the low 180s, had a significant pullback, and then continued the rally, especially after the banking turmoil. Now, price hasn't quite reached my long-term target level of 193. It has stopped just below that, so it hasn't quite completed this triple top formation that I was looking for, which would have provided an ideal risk-to-reward bearish opportunity for that move lower. So we are seeing a lot of choppy price action again for gold. And we are seeing support at 184 as well, minor area of support. So the lack of momentum, or declining momentum, I should say, for gold, and the fact that price is set to open a little bit lower this morning. I know retail sales did come in, so it might push the price a little bit up, a little bit higher in the morning. But overall, price action is still quite bearish, and we could see a continuation lower here for gold, perhaps retesting 184. Over the next couple of weeks. So it'll be interesting to see what gold does there. If there's bullish price action, that would confirm 184 as a base. But if it breaks below that, you're looking at the low 180s, high 170s as a potential downside target here for gold. Okay, taking a look at oil, looking at light crude oil futures. So oil, it's really anyone's guess where it'll head next. I think from a fundamental perspective, it's been quite balanced out. That's been priced in. Whereas, the technicals, yes, we have a strong bearish trend in the last few weeks. There's no doubt about that. But price did reach a major area of support at 63. Strong bounce higher, back to 74. And has declined a little bit over the last few days. Now, the big question is this decline a pullback before continuation higher, or is it a reversal and a continuation of this downward trend? And especially yesterday's price action, which was somewhat bullish, it becomes difficult to say. Over the next couple of days, if oil can close above 72, that would indicate that we could see a continuation higher. But if it closes below 71, that would indicate a continuation lower here and perhaps another retest of 63. So the price action for oil is actually quite ambiguous. And even when I look at the weekly time frame, my bias does lean a little bit more to the bearish side. That's only because I'm looking at the candlesticks over the last couple of weeks. We had a strong bearish candle a few weeks ago, followed by an inside candle, which usually means a continuation of the trend of the previous candle, which was bearish. So by looking at those candles, it does indicate that we could see a continuation lower. And that's where my bias would slightly point to. But when you look at the daily time frame, it becomes less obvious, a lot more ambiguous. And I think oil is going to be a tricky one to trade right now in the short term. But we will take a look at the price action over the next day or two, see where the trend for oil during that time. And we could see a continuation higher or breakdown lower once again for oil. So taking a look at the sector rotation charts, we have 6 sectors in the improving and leading category, and we have 5 in the lagging and weakening category. So in the leading category, we have communications and technology, joined by discretionary, as of yesterday, rotating into the leading category. However, it's rotating there on very low momentum. that indicates that that's not sustainable. I would not view discretionary as a strong leading sector due to that. As a rule of thumb, if a sector is very close to the middle of the chart, it doesn't really mean too much about it. Doesn't really indicate too much. Whereas you really want to focus on the sectors that are further away from the middle of this chart. So technology and communications providing leadership, technology losing out on some momentum, communications finding some momentum. In the weakening category, we don't have anything. And in the lagging category, we have financials still underperforming due to the banking turmoil, followed by real estate as well, not performing that well. We have energy also underperforming due to the fact that oil prices have declined quite significantly in the last few weeks, but still finding some momentum, especially in the last couple of days due to the bullish price action. In our improving sector, we have our three defensive sectors in staples, utilities, and healthcare, all showing very good momentum. So it does indicate that investors, due to the uncertain nature of markets currently, are still rotating towards these defensive sectors. So taking a look here at some subsectors of interest that I have for you today, we have TAN, which was a solar ETF. So this was a bullish idea for the last couple of weeks now, and we were bullish at around 71. Price initially declined back down to our 67 level. Sorry, I actually said at 71 we should add this to our bullish watch list because major support sits at around 68, 69. And that would be an ideal risk to reward long opportunity. So that's what I said at the time. And luckily, it has worked out quite well. Price initially didn't move that much higher after testing the support level at around 68, 69. But over the last couple of days, it has jumped up a little bit higher at that area between the 21 and 55-day exponential moving average, and not showing very bullish price action despite an improvement in momentum. So we are seeing rejections of 74, but again, another inside candle. So we could see a continuation higher for TAN. If we don't see that, you may want to close out this trade for a limited profit. However, I do think some patience is required, and we could eventually see a potential breakout above this blue line, which is the 55-day exponential moving average. Okay, taking a look here at DRIV, which is the Global Autonomous and Electric Vehicle ETF. So another bullish play that we've had for the last couple of weeks. And our bullish thesis for this one was simply due to the fact that this 21, 22 area was a major support level. We saw price once again decline to this area. And a couple of weeks ago, I suggested looking at a potential bullish opportunity. Now, this so far has worked out quite well. It hasn't been very bullish, but it has grinded higher. Price now breaking above its 21 and 55-day exponential moving averages. And despite some bearish price action over the last 3 sessions, yesterday was quite bullish, and price still managed to stay above 22.50. So that does bode well for DRIV. The one thing that we need to look out for is this bearish trend line. Now, I'm always going to prioritize horizontal support and resistance over trend lines. They just tend to be stronger areas of support and resistance. And that's why I still maintain a bullish view here on DRIV. And I do think there's potential for a breakout of this trend line. If we do get a breakout of the trend line, there's plenty of upside, perhaps back to 24 or even 25. If we see bearish price action at the trend line, you probably want to get out of this trade a little bit early, and again, for some limited profits. Okay, taking a look here at INTC, which is Intel. Now, Intel was a bearish play again over the last, I think it was over the last week. And we were bearish on Intel with price, actually it was over the last couple of weeks, because price was at around the 31 level, breaking below that and showing some very bearish price action in that area, despite this initial bullish breakout. I would view that as a false breakout. And now we had that decline back below and price back below 31, indicating more bearishness. So this was a bearish idea. Initially, my target was at 26, 25, major support, as you can see on the weekly time frame. However, we do have some minor support at 29. And what is concerning is the fact that price did decline to that level with strong bearish momentum. As you can see, momentum was declining quite rapidly, but we have a very bullish candle there yesterday. So for that reason, I would suggest closing this trade. Again, it would be a profitable trade, depending on your trade structure. but it would be fairly limited profits. Unfortunately, the price action at this minor support level does indicate that the best course of action would be to close this trade and maybe wait for another setup at around that 31 area. Moving on to FIS, which is Fidelity. So Fidelity, strong bearish trend, as you can see on the weekly time frame, defined by lower highs and lower lows. We had 104, 105 acting as a major area of support and resistance. And we also had this level at around 86, 87, acting as a minor area of support turned resistance. And again, we are seeing a similar pattern emerge at around that $60 level. Price did break down below 60, came back to retest it, but not with a lot of momentum, and ran into some resistance at around that $58, $60 level and showing bearish price action there. So for me, this thesis still remains intact despite the bullish price action over the last couple of days. I think the overall trend is still quite bearish, and I do expect price to decline back down to the 50 level, or perhaps even form a new lower low below 50. Moving on to IBM. So IBM was a bearish play that we've had over the last few weeks when price was at around the 130 area. And so far, again, doing quite well despite the recent pop-up higher in price. Overall, the structure still remains bearish, right? We were looking at IBM because it was overall in a bearish trend. This 150 area is a major area of resistance. It's a multi-year area of resistance. And we were targeting the major area of support or the multi-year area of support at around 115 to 120. And price is almost there. A lot more recently, though, we could see a very bearish move followed by a retracement higher. Price running into some resistance at a previous area of support, bearish price action, which provided us a very good bearish entry for a move lower, and price is very close to that 120 target price. If this is a trade that you did take, because price almost did touch 120, it makes sense to take profits on it now. But if you want to really maximize this trade, feel free to leave it on. We could see a further decline here for IBM, but so far worked out very well for us. Okay, and taking a look at CBRE Group, which is part of the real estate sector. Now, the real estate sector was underperforming, hence why I had a bearish outlook on CBRE with price when price was at 76. And we've had bearish price action during that time. However, price did manage to bounce at 72 and bounce a little bit higher. Momentum is improving, but over the last few days, it's actually been quite flat. And overall, there's a lack of direction here for CBRE. It's very difficult to say where price would head to next. Yes, I am looking at, that 72, 72.50 area, which price is actually managing to bounce higher from on an intraday basis. So that's the minor area of support. Price staying above that, not really closing below that. And that could indicate, we could see maybe a move higher. So for this reason, I'd be looking to potentially close this trade, maybe take a look at the price action today. But if I see some bullish price action, I'd want to close this trade, again, for very limited profits or very close to break even. Initially, it did work for us. However, it's just the last few days of price action are a little bit more bullish than I would like. And with that, that is all I have for you today. Thank you so much for joining me, and I hope you all have a great trading week. I will see you next week for another market outlook.